Hey everyone, welcome back to Corporate Decoder, the place where we crack open the financial secrets of the business world. And let me tell you, Proto Labs has some interesting secrets to spill in this latest 10K filing. Get ready for a deep dive into their numbers, their risks, and where they're headed, because we are going to decode it all. Before we dive headfirst into this report, if you love getting the inside scoop on what these massive corporate filings really mean, smash that subscribe button. And hey, we've built a fantastic community over on our Discord server, so definitely check out the link in the description below to join the conversation. Alright, let's get straight into it. Proto Labs, a company that calls itself the world's fastest manufacturing service, is laying out its annual report for us. They're in the business of making custom parts from prototypes to actual production pieces, and they do it through a mix of their own factories and a network of partners. Think of them as the go-to for engineers who need parts quickly. Whether it is for testing or for the final product, they've been around since 1999 and pride themselves on using technology to speed things up. Looking at the financials for the year that ended the 31st of December 2025, Proto Labs brought in $533.1 million in revenue. That is a nice jump compared to the $500.9 million they made in 2024. It's a 6.4% increase, which sounds okay, but let's see how that stacks up against their costs. Here is where things get a little more nuanced. While revenue went up by about 6.4%, their cost of producing those parts, what they call cost of revenue, actually went up by 6.6%. So their costs are growing a tiny bit faster than their sales. That is a small red flag, like a little drip from a faucet. You might ignore at first, but it could grow. Because of this slight mismatch, their gross profit, which is what is left after they pay for the direct costs of making their products, did go up. It is now $237.1 million. However, their gross margin, that is the percentage of revenue left over after those direct costs, actually dipped a tiny bit. It went from 44.6% in 2024 down to 44.5% in 2025. This means for every dollar they make, they're keeping just a hair less than before. It's not a disaster, but it's a trend worth watching. Now let's look at how they're trying to grow. Their marketing and sales expenses went up by 6.8% in 2025, costing them an extra $6.2 million. They're pouring more money into getting their name out there and finding new customers. This makes sense given their goal to be the supplier of choice. They also upped their research and development spending by 3.7%, almost $1.5 million more. This is crucial for a tech-driven company like Proto Labs. They need to keep innovating to stay ahead in the fast-moving world of manufacturing. General and administrative costs, the everyday running of the business, also grew significantly by 8.5%, an extra $5.5 million. A big chunk of this increase, $3.6 million, is tied to personnel costs, especially because they had a CEO transition that happened in 2025. New leadership often comes with changes and associated costs. Despite these increased expenses, their income from operations, meaning their profit from the core business activities, actually shot up by a pretty solid 26.1%, an increase of $5.2 million. That's good news. It seems they managed to grow revenue enough and control some costs to actually boost their operating profit. This positive trend carried all the way down to the bottom line. Their net income, the actual profit they keep after all expenses and taxes, grew by a healthy 28%, an extra $4.6 million. So even with increased spending, they ended up making more money. Now let's glance at their balance sheet, which is like a snapshot of everything the company owns and owes. As of the 31st of December 2025, their total assets stood at $763.4 million, up from $743.5 million in 2024. They have a good amount of cash and equivalents, over $110 million, their accounts receivable. What customers owe them also grew nicely. Their property and equipment, like their factories and machines, saw a slight decrease from $227.3 million in 2024 down to $215.3 million in 2025. This could mean they've depreciated some assets or perhaps sold some older equipment. Interestingly, their goodwill remained flat at $274 million. Goodwill is what a company pays for an acquisition above the fair value of its assets. This suggests no major acquisitions took place in 2025 that would add new goodwill to their books. On the liability side, total liabilities increased from $73.4 million to $89.5 million. This is primarily due to higher accrued compensation and other accrued liabilities, likely related to bonuses and other short-term obligations. Shareholders' equity, what the owners truly own, went up a bit, which is always a positive sign. The company also disclosed its stock-based compensation. This is when they give employees or executives stock options or other stock awards instead of cash. For 2025, this figure was $15.7 million. This is important because it is a way the company compensates its people, and it's a cost that impacts the earnings per S-hair. It is slightly down from 2024's $17 million. Let's shift gears and talk about the risks. Proto Labs operates in a really competitive landscape. They mention thousands of other manufacturers, brokers, and even companies with their own in-house manufacturing capabilities. So competition is fierce, and they worry about staying ahead technologically and keeping their pricing attractive. Cybersecurity is another big concern, and rightly so. They handle a lot of sensitive customer data, including designs that are essentially intellectual property. A breach could seriously damage their reputation and lead to costly lawsuits. They are very aware of this risk. Like many businesses, they acknowledge that global economic downturns can hurt them. If businesses cut back on R&D or product development, that means fewer parts orders for Proto Labs. Unemployment and economic worries can ripple through their customer base. Their strategy seems to be about elevating the customer experience, accelerating innovation, expanding their production capacity, and driving operational efficiency. They want to be the best one-stop shop for custom parts, from the initial idea all the way to full production. They are really pushing their hybrid model, combining their own factories with their partner network to offer more flexibility. It is also worth noting some recent leadership changes. Suresh Krishna took over as president and CEO in May 2025. This is a big deal for any company, and it often signals a shift in strategy or focus. We'll have to see how his leadership impacts Proto Labs moving forward. Now, looking at these numbers more broadly, Proto Labs seems to be navigating a competitive market pretty well. Their revenue is growing, and they managed to increase their operating income and net income in 2025. This suggests their strategy of leveraging technology and a hybrid factory partner model is paying off, at least in terms of generating more profit. Their focus on customer experience and innovation is smart in an industry that's constantly evolving. However, the fact that their costs are growing just slightly faster than their revenue, and their gross margin has dipped just a touch, means they need to stay vigilant about efficiency. Competition is their number one headache, and with cybersecurity threats ever present, they have a lot to manage. The leadership change also adds an element of uncertainty, though a new CEO could also bring fresh energy and ideas. Overall, Proto Labs appears to be a company that's growing and adapting, but they are facing a tough economic and competitive environment. We will be watching to see if they can continue to innovate and expand their market share while keeping costs in check. Alright, that is our breakdown of Proto Labs' latest annual report. What do you think about their financial performance and their strategy? Are they set to accelerate innovation, or are the risks a bit too much to handle? Let us know your thoughts in the comments below. If you found this deep dive valuable, please give this video a thumbs up and be sure to subscribe for more corporate breakdowns. And again, don't forget to join our growing community on Discord. The link is in the description. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.